Ladies and gentlemen, good evening. It's the 25th of October 2017, and thank you for joining me. This is Christopher Aaron. There are going to be some expansions coming to this channel, and I want to thank you for the interest that you have shown. If you've been with me in this channel for the last number of years, I am very much appreciative of the fact that you're still here. I know there's some people that go all the way back to some of the first videos that I was making in 2015. And if you're new, there's a lot to learn about the precious metals. The focus of this channel will always be on the technical analysis of the precious metals. There are a number of people that primarily discuss fundamentals, and so I don't need to cover that. But the point here is to show what's happening in the most clear manner as possible on the charts. And even though there is manipulation in the precious metals, we can all see that at various times. There's manipulation in all markets to some extent. Even though that is true, there is still merit to looking at the charts because we can see, for example, where are some of those manipulative forces coming in? Where are large buyers coming in? Where are large sellers coming in? There are patterns to human behavior. And everyone who participates in this market, whether they work for a central bank or a large bank or an individual buyer, they're all human beings. As far as I know, anyway. If there's some crazy stuff happening out there with some non-human participants, well, that's news to me. But you never know in this world we live in. At any rate, that will be the focus of the channel. The expansion that I'm looking at coming forward is a number of things, and I'll get into it more after we look at the charts. But for the coming weeks, we are going to have some more interviews. For example, I'm going to have Francis Hunt back on the show, hopefully within the next few weeks. Francis, I really admire his work. He's a technical-based trader, such as myself, but he looks at markets with a different approach. And so there's always value to finding out what other technical-based analysts see in the market when you are looking at that. So we will speak with him, and I'm going to get into a few other things, a few more, you could say, related areas. You know, precious metals are one of my interests, but there is a common theme amongst several of my interests. So after we look at the charts, I'll get more into that in a few moments. So we generally start off by looking at the short-term action here in the precious metals. We're looking at the spot price of gold to begin on the 3-day chart. Not a whole lot that we can see here from the 3-day perspective, except what a grind that we are in currently. This back and forth, up and down, you know, in the mid to upper 1200s right now. A few weeks ago, we were in the 1300s, so it's come down a bit. Looking over at silver, do we see any, the reason why we do this, we look at gold and silver on the short run, is we're looking for relative outperformance. If we see relative outperformance from silver, that tends to give us a hint that there is some strength coming into the precious metals complex. From what I can see here over the short term, we do not see any relative outperformance. It is just a continued grind in silver as well as gold. So the gold to silver ratio has been relatively flat for the last few weeks. This is the 3-day look. Let us get into the intermediate term look here. We're looking at the 2-year chart. Bring up the key. Everything here is color coordinated, so you can really get to learn the system as we go forward. Now, the big thing to keep in mind here is that what we are seeing, what we've seen, we were following this over the last 18 months. This massive surge after the 2015 bottom, big drop into late 2016, and then something of a grind here in the middle of this year. Of course, we know that this was coming in below the long-term 2011 to 2017 downtrend. We show this in some of the longer-term charts that we look at periodically, but here was that long-term trend line coming all the way back from 2011. We had a number of attempts to break out of this trend line and finally did that. And what I've been saying for the last month or so is that after a successful breakout, what we should expect is a retest of the trend line. This was a downtrend line. This line is still coming down. You had a series of sellers showing up at lower, 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 and lower prices that were finally taken out here. So there was a change in this trend of lower sellers coming into the gold market. Now, this was a long-term downtrend, and I think where perhaps my communication of the subject matter a few weeks ago may have not been as clear as I intended. But the point is that when we see a breakout of a long-term downtrend, there is a retest process that must unfold. In other words, you have a lot of people that made short-term profits on this rise up. They sell at a point that is functionally equivalent to the 2016 high. They sell with their profits. And then we are looking to see, has this trend legitimately changed? Have these buyers really stepped into this market for good, like they hinted at here, just back in July and August? That is what a retest is. And now we had some calculations on the retest. The zone that I would have considered ideal was between 1283 and 1301. It has come down below that. Now the challenge here is that I produce these public videos and I give the best assessment that is possible in the public videos. There is a much greater depth of analysis that goes out to premium subscribers. And I'm not just saying that in the hope that you may consider subscribing. I'm saying that because 3 days later, and again the following week, when we are releasing premium analysis, we always have to look for new pieces of data. So the ideal range would have been 1283 for this retest, but I maintained the entire time that this retest could have come all the way down to touch the broken trend line, which at the time was 1240. It's still falling, as you can see. So this is a bunch of technical jargon. I understand that. And if you're not so interested in that, I would just say keep the big picture in mind. We had a 6-year downtrend. That was broken. Big surge on that break. We've seen record volume coming into the gold market here over the last 3 months. All-time record volume. Coinciding with this breakout, and now the price is coming back to see, are these buyers for real? That's what a retest means. The retest could come in anywhere in this green zone. And I would just say that I think it's a perfect setup because there's an immense amount of pessimism in this market from what I can see right now. Pessimism and frustration, which is great from a contrarian standpoint because you have all these incredible leading signals. But what we're seeing, of course, is that the people who were saying that this is going to the moon, that was just not accurate. What we see is a process whereby this long-term downtrend is changing to a stabilization, and then after that, all things considered, we expect a rising trend to begin. This is stage analysis. We talk about these 4 stages, stage 1, 2, 3, 4, which I originally learned from Stan Weinstein, an excellent book by Stan Weinstein. If anyone's interested, I could give you the name of that. It's a technical book. That's what we're looking at gold. We are still in the retest zone here. Nothing has changed about that, even despite the fact that it's taking a little bit longer and a few dollars lower than I would have considered ideal. I will not be willing to change my outlook for a retest unless something happened where this long-term downtrend failed to hold the price. Do not see that happening. Silver, it's interesting, is giving us once again a continued different picture here. Now, we haven't looked at silver for the last number of weeks, But I want to bring up the intermediate term chart here. The bottom here from late 2015, early 2016, nice rise, and we've really just had a choppy back and forth pattern. A note that went out to premium subscribers a week and a half ago, we were talking about this technical signal here, this outside reversal that we're talking about here. This is where the price opens lower than it was the previous day, drops down, reverses, and then closes above the previous day's high. It's tight here on this chart. You can barely see the individual Japanese candlestick bar that we're looking at here, but you can just make it out. You can see that reversal right here in the red call out. So these tend to mark reversals of a previous trend. I said that a week and a half ago, and we had seen the previous trend down. We then saw a move up, and we're coming back. And the trend that I'm looking at now from the flash crash lows to hold here, this would be really nice, and we're coming back into that trend now. It would come right around $16.70 here. This linear rising trend from the bottom of the flash crash lows. So that's the intermediate term look at silver. Now, the other thing to consider here, and once again, we've seen all those signals in the gold market, and we're looking at silver. Not quite record volume in silver the same way as gold, but it has gotten quite close. So we're seeing that near record volume in silver as what has basically happened for the last year and a half now is just sideways price action, right? Despite this volatility, including the flash crash, despite this volatility, flat prices since May. But I have to tell you something, because I was producing content and interacting with people back in the middle of 2016 here. The sentiment now is much worse than the sentiment was in April and May of 2016. So once again, as a contrarian, someone who tries to look at things from the other side as maybe what the broad sentiment is, I would say I think that's a good thing. We just see prices grinding, oscillating, but basically no change as a net sum for the last year and a half. Yet we see all these signals from the gold market that look good over the intermediate term future. So the silver market looks very healthy to me from a long-term perspective. Once again, I do not expect anything such as a skyrocketing silver price over the intermediate term, but a wonderful basing process is unfolding here, especially when we look at that from the longer-term perspective. I would like to see this trend line hold here. If this trend line holds and we crawl our way back in silver back to 1850 over the next month or so, I'm going to be looking for this primary resistance here between $18.30 and $19 to break, and then we challenge 2016 highs. That's what I'm looking for in the silver market. We will know that is not going to play out if this trend line breaks on this next attempt, in which case silver is just going to continue basing like this for the next several months. Very healthy price action, even though it's frustrating to watch over the short run. Okay, so this theme of gold and the channel, we're going to be expanding this over the next several months. I'm going to get into some related topics. And this is really a call to anyone who's interested in this idea that gold is only one part of a broader theme. What is the broader theme? I believe it is something to do with an optimization of oneself and of the world in general. Gold, of course, is an important financial part of that. Gold serves a distinct role historically as a store of wealth, as a check on unrestrained power by any one entity. But gold is only one portion of this broader theme of optimization. You know, there's health, There's the health of ourselves. There's the health of the planet. There's something about a spiritual searching. Or if we don't want to use that word, that's okay. I would say also an inquisitive nature in the world, a seeking for that which is beyond our normal everyday experience. And so this expansion is something that I'm going to be looking at, some of these related themes that I think are important in my life and that I feel are important to share. Because we live in this time of really intense juxtaposition. There's incredible things happening. Some of the technology that we see that has really changed our lives over the last number of years. Look, the way that I'm communicating with you by the internet, this would not have been possible 25 years ago. The fact that you can get on a magical flying bus and end up on the other side of the planet 12 or 24 hours later to see what it's like over there, that has only been around for 2 or so generations. So, I think this reality that we're living in is quite incredible. The progress that we're making as a species here. But at the same time, there are those forces who are seeking to stop this kind of expansion of our species. And I think gold plays a key role in protecting individuals financially. So what am I talking about in particular? This quote by Alan Greenspan, I think, is incredible. In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value. And Alan Greenspan, in his tenure at the head of the Federal Reserve, was one of the great inflators of our times. This is what's so ironic, but this was from before his days in the Fed, when he worked, I believe, for a private company, or he was an independent economist, and he still understood the role that gold had in the world system. So we're talking about gold as a protector of property, a protector of labor. From what? From the Federal Reserve and the other central banks in the world, which, as we know, are really tools of some of their larger member banks. This is one of those political cartoons from the 1930s that came out around the time of the founding. The Fed was founded in 1913, so this is about 20 years later. And you're seeing, the nature of these cartoons that came out back then. This was a popular way to comment on what was happening in the world. And we see here this monster squid National Reserve Association referring to the Federal Reserve and other central banks having tentacles in the Treasury, the U.S. Capitol, the White House. And also, ironically, right, what is it doing? It's consuming the wealth of the New York Stock Exchange. And there's a tendency to see all the companies that operate on the stock exchange as, these greedy corporations. But some of these companies really are doing quite incredible things in our lives, in technology and medicine and transportation and whatnot. So here we see the Reserve Association even sucking away resources from the companies on the New York Stock Exchange. So what is another one of those things that gold stands in the way of? It is unrestrained war making. And we see this quote here by President Eisenhower in the 1950s. Every gun that is made, every warship launched, every rocket fired signifies, in the final sense, a theft from those who hunger and are not fed, those who are cold and are not clothed. This world in arms is not spending money alone. It is spending the sweat of its laborers, the genius of its scientists, the hopes of its children. So, gold stands in the way of this unrestrained spending by governments and the military-industrial complex on war. because when the currency is on a gold standard, the government cannot print, or through the Federal Reserve cannot print as much money as it wants to pay for a perpetual war, which is the state that we are in now. And look, I speak from experience on this. Here's my last tour in Afghanistan in 2009. And I will say, for the record, I am a patriot and a lover of this country and a lover of freedom and peace around the world. But what I saw with my own eyes when I was overseas is that the amount of waste and the destruction of life and property far outweighed the benefit to our country. I did work in the intelligence community as a quote-unquote DOD civilian, someone who had a gun on him, even though I was considered a civilian. But I did spend a year in Iraq and Afghanistan, and this will be a subject that I get into in the expansion of this channel in future weeks. For now, I will leave it at this, that I think gold serves a key role across a lot of these themes. We're talking about the expansion of the world around us, the expansion of the potential of human beings. We're talking about that there are interests in keeping us from expanding, and gold stands in the way of those who would stop the expansion of our potential. So that is what I see this as. This is more important to me than just showing some charts and having a business about this. I do have a business that covers the precious metals, and we cover things like this in much more depth. So I do want to mention that. But this is a topic that is something that will be a passion and interest of mine for the rest of my life, even if I no longer publish research in the way that I do now. So if you're interested in the premium research that we do publish, and by the way, this weekend coming up is going to be the premium member video. We do that once per month. It's going to be like this, but it's going to be much longer. And we're going to be covering not only what's happening in the precious metals, but also the mining sector, and also what's happening in the U.S. stock market and the U.S. bond market. The bond market is the largest market in the world. It dwarfs the stock market and the precious metals market combined. And we see this unprecedented situation currently in which U.S. bonds and U.S. stocks are both essentially at the highest levels that they've ever been simultaneously. And this has never happened before. No one who is alive today has ever lived through a simultaneous peak in the bond and the stock markets. So I'm not saying that the peak and crash, as some are predicting, is coming imminently, but there are signs that this thing is beginning to roll over. So we're going to be looking at that, especially in the bond market. We look at the broad commodities, the GDX, as well as the individual mining companies that we are investing in here, and all the research to back that up. If you're an individual and you've enjoyed this video, I do want to let you know that I work with individuals on a one-on-one basis. I do not sell the metals or any of these mining companies. I work with individuals to try to balance your perspective on the precious metals, to try to ensure that you are properly diversified, to help with logistics, to help with recommendations in companies to order from or companies to sell from. I work with beginners all the way to people who are doing advanced trading in the futures and the ETFs. Thank you once again, and I will see you this time next week.